What's up, guys? Welcome to Finance Corner. My name is CK Mateti, and we will be taking you through how to compute the interest earned from your investment in money market funds. Remember from the previous videos we've done, you can check it out that we discussed the money markets funds, everything that you need to know, the components, the regulations, and some of the money market funds that you may think of investing in. Now, the definition of a money market fund is that they are interest bearing investments where the interest is calculated and earned monthly. These kind of investments are low risk investments with elements of stable returns. Well, let's dig in and look at the practical illustration of how you may need to understand how the interest is computed and how much interest you earn. Okay, now some of the factors you may need to consider are the interest rates that the money market fund is giving you per annum. These interest rates, remember, they fluctuate according to the performance of the investments in the market. And for this case, we will use an example of an average of 12% interest rate per annum to see how much you may earn at the end of the year, at the end of the month, and even every day. Well, we will also consider a normal year with 365 days interest rate per day. For this case, we will have the 12% per annum. You divide by the number of days in a year, which is 365, and you'll be able to get the daily interest. Okay, let's do that again. 12% divide by the number of days in a year, and you'll get 0.03% per day. That is the interest you're getting per day, assuming that the day has 365 days. Now, let's get a scenario, an example of initial investment of 100 Kenya shillings as indicated here. So, how much earnings are you going to be getting in terms of interest per day? This will be the contribution in terms of investment, the initial investment of 100,000, you multiply by the daily interest. And for this case, it's the 0.03. So how much are you making or earning in terms of interest per day? It's 32.88 Kenya shillings. Now, in a month, assuming a month has 30 days, we expect that you will get this amount per day multiplied by 30 for you to get 986.3 Kenya shillings per month. And that is you are running a balance. Assuming that you start investing today, at the point of recording this video in August, we'll assume that by the end of the month you will have 986.3 cents Kenya shillings. Now let's see the power now of compounding. At the start of the following month, your amount subject to computation of the interest will not be 100,000 Kenya shillings, but for this case will be the initial investment, which is 100,000 Kenya shillings, plus the interest that has been made from the previous period, which is 986. And now that means the earnings in terms of interest per day will not be 32.88 for this case, but cumulatively will be the summation of the initial contribution plus the interest which has already been made multiplied by the total, the daily interest. So what will be the earnings per month in terms of the interest for that particular month? This is the second month. The same formula applies, which is the earnings per day multiplied by 30, and that particular month you will be earning 996.03 Kenya shillings. Now, what is the cumulative interest? The running balance will be the total amount of interest made from the first and the second month, as the formula indicates. Now, let's look at the third month. The same scenario applies, that in the third month, you will have the amount that the carrying balance from this first month plus the interest made in the 2 months. For this case, will be this 109.86 in the second month plus the interest that you made in the second month. And the formula continues. So you can clearly see that the earnings you're earning per day are cumulatively increasing. For this case, we started with earnings per day the first month with 32.88, and currently in the line that the month of concern in this case is 33.53. Therefore, this is what we refer to as the power of compounding, that cumulatively whatever you're making in terms of interest are summed together with the initial investment of, for this case, 100,000 Kenya shillings, will be earning you more and more interest. And that's how cumulatively you will notice that it's a basic reinvestment of the interest. Therefore, let's see at the end of the year how much you may have made from your initial contribution of 100,000 Kenya shillings. Well, let's see the formulas again. Earnings per day has increased to 33.53 cents. Earnings per month, now we are making 1,000 plus. And the running balance, the formula follows. Let's just drag this formula down here. Now, let's see the fourth month. The fourth month, the formula will continue. So if you drag this down, it is very clear that we are making more money every month. From the interest we are making month to month, we are cumulatively increasing on our investments. Now, let's see how much you've made at the end of the year. The total amount of money in terms of interest you've made is 12,000. And the 12,000 Kenya shillings is what you should or you're entitled to get. But remember, there are regulations and laws and taxations that may also need to be taken care of. And for this case, the money market has a withholding tax of 15%. Therefore, the money that you've made, you will not get all of it, but you will get 15% less. Therefore, for you to understand how this is coming along, you need to know that the total amount of interest that you have earned is subject to 15% withholding tax. Therefore, you have to multiply with 0.85, meaning it's 100% less the 15% withholding tax, and the difference is 0.85. That is the money that you've made at the end of the year. And therefore, you will have made a total of 10,624.36 Kenya shillings for this matter. Well, this, however, may not look as sufficient as you may think or material to you having invested this 100,000. But I can assure you that if this money was just lying somewhere in a current or savings account, earning at most 3 to 4% returns per year, would not be impactful to you, as you can see this lump sum of 10,000 that you've made just with 100,000 Kenya shillings initial amount. Let's assume that you had, for instance, half a million just seated somewhere and lying without any interest cumulatively. And you will notice that if we tamper with this and we invest a initial amount of half a million Kenya shillings, how much you may have made? You would have made around 53,121 Kenya shillings in a year. Trust me, this amount could really boost your finances. You can even think of reinvesting it back for the second year, or you may even sort some of your bills, some of your debts. And therefore, this is what we are referring to as the power of compounding in money market funds. Again, just to remind you some of the best performing money market funds, you may check them out. Remember always to do your due diligence before investing in them. Some of them are Itika, Saiton Money Market, Sanlam, Apollo, CIC, NCBA, Old Mutual, among others that you can do your research, and if they satisfy your needs, you may proceed to invest in them. Thank you so much. Kindly subscribe, like, and share.